All right, a little disclaimer that I'll run through real quick. Many of the persons listening and or watching this webinar may be in direct competition in the real estate brokerage business. Therefore, to avoid any liability under the federal or state antitrust laws, any discussion of competitive business practices and or the amount of fees and or commissions charged or to be charged by real estate brokerage companies to their customers or clients and or compensation and or splits paid or to be paid by brokerage companies to other brokerage companies is strictly prohibited. It is NICAR's policy that it will not entertain any discussion that creates the potential of a violation of federal or state antitrust laws at any meeting, podcast, or conference sanctioned or sponsored by NICAR. Ahmed, take it away.
Thank you, Gary. Where am I? And I can't see anything anymore. Yeah, okay. Can you hear me?
Yes.
But I can't see anything here for some reason. I don't know. Anyway, so it's a pleasure to introduce Mike Cobb, whom I've known for, I don't know, many, many years. We first, I think, met in somewhere in our international trips, I think it's somewhere in Asia. But early on, I discovered something about Mike. Mike was strategic, knowledgeable. And he was a diplomat because Mike made forays into foreign countries, not based on the sound bites, but he did his research. He went to these places. He met the people. He met people who mattered and made decisions. And so that was a part of Mike that I understood to be what made him so successful. It's not something that came easy to most of us who were not involved in this kind of practice. And so over the years, I've seen him move from country to country, even places where they thought, wow, it's not safe to be there, but Mike was there. And he made it work. And so, that is some part of it that comes to mind. And it's important that we listen to people who do not have any other ulterior motives other than what they are there to do for their best, for their company, for their, expanding their development globally, and there are no other motives attached to it. So it is very pure, and it appeals to people like us who are in the field. So Mike is a chairman and chief executive officer of ECI Development, and he's going to break down on the cryptocurrencies entering the real estate market, what's driving this shift, and what it means for professionals across the industry, from practical applications to potential risks and opportunities. His presentation will provide a clear, real-world perspective in a rapidly evolving landscape. One more thing, Mike is also an author, a New York selling best seller, and he'll probably tell you more about his book, which is, I think, a must-read for every realtor thinking of buying property overseas. Thank you very much, Gary, and Mike, it's all yours.
Ahmed, thank you for the introduction, and great to be with you as well as a lot of the other folks. It's nice to see familiar faces. I saw Teresa and Clayton join as well. Thank you, guys. This is a great group, and I've been fortunate to have been invited to present several times over the years here. And today's presentation, Marcia Collins asked me to present on crypto. In fact, let me go ahead and just load that up here. And before I get started on the, let me just close that. Okay. Before I get started into the actual presentation, Deanna and I were talking ahead of the meeting. I think Ahmed was here as well. Why this is important? I mean, this presentation does get into a little bit of the technical aspects of crypto, because I think it's important for us to understand, what it is, kind of how it works. But the analogy I have is that very few of us, I don't, understand the Federal Reserve System and fractional banking. I don't understand any of that stuff, but yet I have no problem walking into a store and buying something and giving the person a $20 bill, right? A Federal Reserve note. And so the same thing is true with crypto. We don't need to understand all the technological aspects of how it works to use it as a tool, or in our case, as real estate professionals, how our clients will want to use this as a tool, and how we need to understand enough to be able to serve them, the clients who want to use crypto as a tool, to allow them to do that. So a large part of the presentation will be focused on that, but let's see, why don't we dig in here? I hear this a lot. We're going to talk a lot about Bitcoin. Crypto is far more than Bitcoin, but Bitcoin is certainly the largest piece of the crypto world. Bitcoin was up in the $120,000 range, I don't know, several months ago, and then it crashed to 65, 70, and now it's bouncing around 75, 80. Right. And every time it has these big drops, crypto's dead. Crypto's dead. I think this is just noise in the marketplace, right? From folks that aren't ready to adopt a new technology. And if we just go all the way back, money's changed. Money has changed many times over the years, and it's going to continue to change, right? We had silver coins, gold bars, and we had ledgers, right? You could walk into a store and buy something on credit, right? The money, that was money. Your word was money, right? Your signature on a ledger. Then, bills themselves, checks. And then all of a sudden, Diners Club came out with this thing called a credit card, or a Diners Club card. It's evolved into American Express, Visa, MasterCard, and now, electronic forms of payment, whether it's Apple Pay or Zelle and Venmo, right? So money has changed over time, and crypto is truly and simply just the next evolution of money as we move into a more electronic world. And going back to the original conversation about what is crypto and what is Bitcoin. Bitcoin's a little over half of all the cryptos. Ethereum is a very strong second, right? And then we have Tether, XRP, and some others. But at the end of the day, Bitcoin and Ethereum both have utility. There's a word that sometimes gets used, utility tokens. A lot of times crypto has been very speculative. Buy this coin and it's going to go to the moon. That was always the thing, right? It was a very speculative, I would almost say tulip bulb kind of speculative bubble in the marketplace, and we've seen tons of these coins, and sometimes they're referred to, there's Bitcoin and then there's shitcoin. Many of these coins are referred to as shitcoins because they just simply have zero utility. They're created by somebody who wants to put them in the marketplace as a speculative product. They're going to pump and dump, and this has happened, hundreds, if not thousands of times now in the last decade or so. Bitcoin is a very different animal. Ethereum is a very different animal. They have utility, different kinds of utility, but they have a use in the marketplace, either as a transactional item or as a building block for other things. And that gives them lasting power and lasting worth, real worth in the marketplace. And so a lot of the presentation is really focused on Bitcoin specifically, understanding that there are other cryptocurrencies as well. Here are some others: Ripple, Bitcoin, Ethereum, and others. The thing that we mentioned, Bitcoin is today trading around $75,000, $80,000, and that's a lot. I mean, you just imagine a dollar bill is worth $80,000, right? So you have what are called Satoshis, and they're the fractional pieces of a Bitcoin for smaller transactions, of course. So think of a Bitcoin as like a dollar, for example, and the Satoshis as pennies or literally fractions of pennies. For a long time, crypto was the evil outsider in monetary theory and in monetary practicality for governments around the world. We'll talk about a couple governmental things and regulatory issues that are out there. But the Genius Act that was passed recently was truly the first regulatory regime that was put around crypto in the United States. Up until that point, it was a largely non-regulated product in the marketplace, financial product in the marketplace. And that gave a lot of uncertainty to bankers. And if we know one thing about bankers, uncertainty is not their friend. Uncertainty is their enemy, especially when you've got the Federal Reserve, FDIC, and other Treasury departments, FINRA, and others regulating them, right? So if you're a banker or you're in the financial services industry, not having clear regulations is really an area that you stay away from, because you don't know how the regulators are going to perceive it and regulate it. If you make a decision, was it the right decision? Are you going to get fined or punished by one of the regulating authorities? And so the Genius Act, what it really did was it created a regulatory framework for people in the financial services industry, banking and other industries, to allow a certainty, allow for a comprehensive regulatory regime to come around crypto. This was huge because this normalized, to use that word, this normalized crypto as a financial transactional element or manner. Huge thing. So here we go. So some of the enhanced consumer protection in the digital markets, right? Financial stability, right? Innovation with payment technologies. We're now talking about CBDCs, central bank digital currencies. They're coming. I mean, they're here, but they're really on an upswing. And then lastly, and this is really the big deal, is to clarify the rules, right? To put this regulatory regime around so that people in the industry can work within boundaries that allow them to do so with comfort that they're doing things legally and appropriately inside a regulatory regime. All right, so 600 million people, that's 1 in 13 around the world, are using crypto. You can see it's grown significantly from 2024 till I guess this is over 1 year, right? But the growth over 1 year has been incredible. More and more people using it. That's about 7% of folks using crypto, compared to PayPal and American Express. Kind of interesting, isn't it? We talk about how money has evolved, right? And we talked about how American Express was a predecessor to the PayPal, and PayPal was sort of a predecessor to crypto. Crypto, for a lot of reasons that we'll get into, has really accelerated into the marketplace and has now surpassed both PayPal and American Express. One of the things that we've seen happen is big institutions, whether it's Morgan Stanley, Goldman Sachs, BlackRock, they've themselves decided to be part of the crypto Bitcoin world, whether it was setting up ETFs or whether they're buying and holding Bitcoin and crypto themselves. When these big institutions became part of the universe and part of the infrastructure, things changed from a public perception, right? It drove these guys getting involved drove the regulatory changes as well, but it changed public perception, and that is huge. Again, percentage of U.S. adults, right, owning cryptocurrency going back to 21 has doubled since 21 till today. So 15% to 30% of people who own cryptocurrency. So now roughly a third of all U.S. adults own crypto. One of the sayings is that Bitcoin is like digital gold. They've set up a finite number of coins. 21 million Bitcoins can be mined. We'll talk about the mining in just a minute. But what that does is it provides a finite resource. The Federal Reserve and governments around the world can print money. Most governments can, and many countries and governments do print money. And what that tends to do is create inflationary environments. If we go back to the Weimar Republic in Germany, right? You had to have wheelbarrows of paper money to buy a loaf of bread, right? Zimbabwe, the famous thing about the Zimbabwe currency, right? They have the $100 trillion notes that were worth a penny or two at the end, right? So when you can print an infinite number of something, the value tends towards zero. Bitcoin, because it has a finite number, 21 million will be the total number ever allowed based on the software itself. It is a finite quantity. And so it carries this sense of anti-inflation powers. So now we're going to dig into a little bit about the technology itself. And I want to talk about three things. Bitcoin is a product. It's a token. The blockchain is, we'll talk more about that. That's what it rides on. Cryptocurrency can be any form of transactional medium on the blockchain. So I like to use it, and we're going to bear down. And there's a picture of a bear down, all right? The next 12 slides are a little bit technical. They're not super technical, but we're going to bear down. It's not my normal presentation style, but I think this is an important element of understanding what the various elements of blockchain, crypto, and Bitcoin are. So how does a blockchain work, right? It's really just a set of numbers. They're structuring the data. So when a transaction occurs, this data is logged. Number three, multiple copies saved on many machines. We'll come back to that again. Really, really important. And it's very decentralized and very diverse. So they collect the information on transactions. I buy something, I sell something, somebody gives me a Bitcoin or a Satoshi or however many it is. That information is collected, mined along with many other people's information, and it's entered into a block. So think of a spreadsheet. Let's say there's 100 transactions, right? Buying and selling, lots of us all doing that. Those 100 transactions get put into a spreadsheet, and that spreadsheet becomes a block of data. It's a block of data. Well, the information is then encrypted. Now we have a spreadsheet. They encrypt it, and they take that and they chain these blocks of data together. This 100 transactions, the next 100 transactions, the next 100 transactions, and they are chained. So now we have a blockchain. That's the word blockchain. So it's a bunch of spreadsheets basically that have been encrypted, that have been hooked together into a chain. This slide, we're going to take the next 2 or 3 minutes, and we're really going to learn. No, we're not. We're not going to look at this slide at all. Anyway, there's a lot going on here, but we're going to just keep on going. All right. The benefits of a blockchain. You cannot alter it ever. Like once these blocks of data have been encrypted and sent to millions of computers, right? Tens of millions of computers around the world. That information is now stored independently by millions and millions of computers. That there's no way to go back and change it because you could never find all of those computers to change it in all of them. And you would have to do that to get it to be changed. So it's not reversible. The data is valid and trusted. The transaction occurred. It's a one-off transaction. Decentralized, right? Again, millions and tens of millions of computers around the world holding the same information. So that if any 1 or 10 or 100 or 1 million of these computers get hacked, the other 100 million haven't. So huge. No central authority. This is huge. We'll talk more about this in a minute. And then the stakeholders really run it. And so in the middle here, this slide I do want to point to. You've got I buy something, for example, on with a Bitcoin, right? So I go online, I buy whatever. I buy something with Bitcoin. That information is now sent to a bunch of computers, which send it to a bunch more computers, which send it to a bunch more computers. And so you've got this exponential expansion of who has this data. Again, it's not changeable and it's not centralized. The centralization, if we look at real what I call real money, right, in people's minds, dollar bills, right? It is printed by the United States government. This dollar is legal tender, is backed by the full faith and credit of the United States government, right? It is a centralized system, whereas crypto is decentralized. There is no anyone, or anything running it. It's on millions and millions and millions of computers. It's a software program that's resident everywhere. And so if you look at the Gen Zs, and we're going to come back to the Gen Zs again and again here, and it's not just the Gen Zs, but the Gen Z demographic, that group of people love the decentralized world, whether it's in money, whether it's in activities. The decentralization is a very powerful philosophical construct for the Gen Z demographic. It is for other people as well, other demographics as well, but the Gen Zs especially. We'll come back to why they're so important in a minute. Benefits of the blockchain, they are confidential. If I buy something on Bitcoin, anybody and everybody in the entire world can see that a Bitcoin was sent from a wallet. They don't know it's my wallet to somebody else's wallet, right? That every transaction is 100% fully public, except that my personal information is 100% private, as is yours. You and I do a Bitcoin transaction. People can see that one Bitcoin moved from a wallet to another wallet. So it's fully accountable by tens of millions, hundreds of millions of people, but they don't know it's my wallet or your wallet. They just know that a Bitcoin moved, right? So if you think about the stock exchange, right, the tape, right, that the tape was so important to be produced, because what the tape showed was the total volume of transactions on any stock or all stocks at any given moment. But you didn't know if it was me selling you a stock or me, somebody else buying stock. You just knew the total volume. And that's what the blockchain does. The blockchain shows the volume of transactions with 100% privacy and confidentiality of what transactions occur. Encryption, everything's encrypted. I love this. It's roughly 2 to the 100 times harder to decrypt a message than it is to encrypt it, right? You can use powerful encryption software, fast, boom, it's done. And then to decrypt it is so much harder. Everyone's a copy of the ledger. That's the point. It's like the tape. Everyone can see all volume of transactions. Chronological order is one of the reasons it's impossible. I say impossible, next to impossible to ever change, because you'd have to go back and change all of the blocks in that data chain going way back. It is immutable, and again, all you can see is a ledger address. You don't know who it is. 19 million of the 21 coins have already been mined, a couple million remaining. The mining process itself is solving mathematical puzzles. And the mining process is really important because it's the mining process that then validates the block of data. And each block of data in the blockchain has some mining with it. And that's how people earn more Bitcoin. They earn Bitcoin by doing these mathematical puzzles that then allow the block of data to be secured. It is a major disruptor, just like credit cards were a major disruptor, just like PayPal was a major disruptor, right? Every time there's a new monetary instrument, we see disruption in the marketplace. This one's a disruptor in some new ways, and I think some powerful ways. We don't need middlemen in transactions. I don't need anyone. I can pay for something with a Bitcoin, and I don't need anyone in the middle. There's no government involved. There's no bank involved. And so I can do a transaction. It is very, very quick. The blockchain itself acts as a registry system. Again, Bitcoin is one of the elements of the blockchain, but at the end of the day, you can put titles on the blockchain. It is a perfect register of contracts, because a contract, once it's lodged on the blockchain, a title, once it's logged on the blockchain, can never be changed. It's immutable. That data is out there stored on hundreds of millions of computers around the world. So it is perfectly secure. It reduces costs and fees, liquidity. It's immediate, but then the idea of fraud. Once something's on the blockchain, it's there forever. I talk about these just if again, it's important. People are like, oh, what happens? You know, what are the downsides, right? If you lose a password if you own crypto and you lose your password, it's gone forever. Just think about if you're a gold bug and you go out and dig a hole in your backyard and bury the gold and you don't tell anyone and you die. The gold's gone forever, right? It's just buried somewhere and nobody knows where it is. Same thing with crypto. You have to make sure you know your passwords. The keys are sort of a way to get back in, maybe a backdoor idea. And the seed itself is a way to come back into your crypto if you lose or forget your password. So these are the most common mistakes. I think it's about maybe 19. I forget the percentage. There's some big percentage of crypto that's been lost forever. But here's why it's relevant, folks. Here's why it's relevant to us. Okay, right here, right now. Your future clients will be using this more and more as a tool. And if we're not ready to pick up and understand that we can help them use this tool, we're in trouble. So crypto ownership by generation, right? So right now, millennials have the biggest chunk, Gen X, 20%, Gen Z, 13%. Boomers have the least, by the way, which is not surprising, right? Gen Zs and Gen Xers are too young to have a whole lot of money at this point. Millennials, they have assets, and you can see the adoption of crypto by a generation that has money, the generation after the baby boomers. Home purchased with cryptocurrency, but look at this, how it flips around. Even though the Gen Zs, millennials are a younger generation, they make up the biggest chunk of home purchases using cryptocurrency. Gen Zers, how soon do they want to buy their first home? Right? By the way, it's 97 to 2012, 70 million folks, 20% of the population, right? But their timeline to buy homes or make commercial transactions, and it's largely a commercial group as well, 1 to 6 years, right? If you just look at the bell curve there, the biggest chunk, what's that, about 70%? Yeah, about 70% of transactions for Gen Zers to buy their first home will be somewhere between 1 and 6 years. So we have time to be in front of this. We have time to get in front of this. And we need to be in front of it because, again, home ownership was a very small percentage of Gen Z. So it's at 24% of Gen Zs own a home, right? Versus 65% of baby boomers. So in terms of a demographic, millennials, just under half, 43%. So you've got this incredible potential. You've got this incredible opportunity to serve people with less than a third to a half of their demographic as homeowners, right? This is a huge opportunity for us. And those two, millennials and Gen Zs, are going to be the largest consumers using cryptocurrency when they decide to own a home. Pros and cons: speed of the purchase. Crypto's fast, it's easy. Sometimes you can get a discount. And for us, the pros are that we understand that this is Gen Zs, this is millennials, and it's our opportunity. Some of the cons are kind of working their way out now. The escrow issues, the Genius Act, as the regulatory framework gets pushed into the various industries, we're going to see more and more of the industries accepting and facilitating, not just accepting, but facilitating, creating the right kind of forms, processes, procedures to address crypto as the mechanism for the transaction, whether it's title, insurance. It is a smaller market. There are still speculative issues in the crypto arena, less so with Bitcoin than many of the other currencies, but the volatility of the Bitcoin or the crypto can be a challenge at a closing date, of course. Here's where I think it gets exciting, and here's where we're seeing most of the transactional volume in crypto, other than, say, a down payment. It's a loan against crypto, because you've got an asset that has value in the marketplace. It has liquidity in the marketplace, Bitcoin, Ethereum being the big ones. You've got an asset that has liquidity in the marketplace, and you can go borrow against it, so you don't have to liquidate it. And think about stocks, for example. If somebody has a large stock portfolio, they don't want to liquidate their stock, take the capital gains hit, whatever it might be. They can go borrow against that stock portfolio to make a down payment on a property or buy the property. Same thing is now happening in crypto as well. We talk about collateral for homes and real estate, boats, gold, stocks, money. All of these things have been collateral. Go borrow against them, and Bitcoin is the newest form of collateral in the marketplace. Again, I have some companies coming up, and you can get a copy of the slides. We'll send you the information. But really, the idea is you just simply take your crypto, you borrow against it, and then you repay on whatever the timeline. There's nothing special about this. It's really as simple as borrowing against any other asset. Not all institutions or banks will do it. In fact, very, very few institutions will do it, but they are becoming more and more and more. Great interest rates, efficient, tax-friendly, same as not liquidating stocks, no capital gains tax when you take and borrow. Here are a couple companies that are doing it. Lendin, Milo, Helio. Again, some of them have their pros and cons. Again, these are the places that your clients will likely be looking to borrow against their crypto. If they have a large crypto portfolio, this is the most economical and usually the smartest way to make a transaction. The title companies using crypto, there are some now doing this, and again, with the regulatory framework of the Genius Act out there, more and more title companies will be using the Bitcoin and crypto and blockchain specifically for the title process. Here are a couple title companies that are using it: Propy, Guarantee, Title Experts, Old Republic Title. And so they're out there. Again, if we're not aware of them, shame on us for not being on top of it. But now you are. Now we are. We can serve our clients looking for this. First U.S. crypto mortgage, BPN Capital Group. I can't remember the date on this. There it is, 2021. So the first U.S. crypto mortgage was 2021, 5 years ago, folks. I mean, we are really right on the leading edge of all of this, which is great. You're here today. Congratulations. Well done. You're paying attention to something that will be the future of our business going forward. We had our company, ECI Development. We borrowed $70 million. We didn't borrow 70, but we have a $78 million hotel in Belize, and we borrowed about $53 million on a crypto-backed loan. We were probably the first crypto-backed loan, maybe in the world, but we were able to secure funding for our Marriott hotel in Belize using a crypto-backed loan. Mentioned other governments out there. El Salvador back in 2022, I believe. I need to get that date right. Anyway, made Bitcoin legal tender alongside the U.S. dollar. Oh, 2021. I was off by you. There we go. I knew it was September 2021. Bitcoin became legal tender alongside the U.S. dollar. El Salvador uses the U.S. dollar. President Bukele, very forward thinking, said, you know what? There are a lot of folks out there that like crypto, like Bitcoin, and he saw that having crypto as a legal tender, Bitcoin as a legal tender, would help him, his country, and it has. We've been asked to build a village for Bitcoiners. Might not be your thing, but it is for a lot of folks, and we've been asked to do that by some very, very influential people in El Salvador who are part of the Bitcoin and crypto community there. Just some ideas of what that would look like. There really are a world of options out there for us as real estate professionals. These happen to all be in Central America. I'd like to just point out that a lot of times people think that the tropics or Latin America is sort of one thing, the Caribbean, Mexico. But as you can see from these pictures, you've got everything from Napa Valley, kind of Sonoma Valley with the Andes in the background, Mendoza, Argentina. You've got what I call springtime all the time. Cuenca, Ecuador, it sits up at about 8,000 feet. It's maybe 60, 65 at night, 70, 75 degrees every day of the year. They go coffee in the mountains around it. Beautiful old colonial city. about 5,000 U.S. and Canadian expats there. And it's an old colonial city. If someone said, I want a modern city, Medellin, Colombia is a modern city at elevation with springtime all the time. Some people like desert, right? They like Phoenix, they like Tucson, but they like the beach. Well, Cabo San Lucas is desert at the beach, right? Many parts along the Mexican coast offer that. Parts of Costa Rica, El Salvador, Nicaragua, southern Mexico offer sort of that Southern California desert, cactus and palm trees kind of environment. And then you've got your, stereotypical Caribbean. So Latin America itself offers up an incredible diversity of geographies, whether it's beach, mountains, the weather, colonial cities, resort communities, modern cities, right? So your clients, in fact, some of the data, the new data, a Gallup poll came out in December of last year, showing about a third of all U.S. citizens are now considering a property overseas. So it is happening. We really can serve these folks. When a lot of these folks go overseas, they get margarita madness. They buy the first thing they see. It's awesome. It's wonderful. One of the things that we as real estate professionals can do, many of you have heard me give this entire presentation. I'm only going to show one slide here. I think there's a question sometimes we have of ourselves. Do we bring value to a transaction? You might say just, I don't know anything about vineyards in Argentina. I don't know anything about, the tropical highlands or Costa Rica or Panama or wherever it is. Even if you don't know anything about it, you still can bring incredible value to a transaction. And when we as real estate professionals bring value to a transaction, we can earn a commission. We can earn a fee for that service. And that's why we're in business, of course. This question, I love this question because it's so visual. My book has 30 questions. This is question number 30 in my book. Is the home or condominium plumbed for hot water in all the bathrooms? Right. And sometimes it is, but many times it's not in the developing world. Here you can see a beautiful faucet up top that has, hot and cold running water. But if you look underneath the sink, what you actually see is a Y splitter coming out of the cold water pipe so that both of the taps up top have water, but they're both cold, right? And so, we don't know what we don't know. Our customers, more importantly, in this case, our customers don't know what they don't know. And they make the assumption that when they see that beautiful faucet on top of the sink, that they've got hot and cold water and the shower has hot and cold water. And when the reality is very different. And so the question I would hope that we could ask ourselves as real estate professionals is, do we think our client would want to know before they paid $500,000 for a beautiful condo in Costa Rica? By the way, this was a picture from Costa Rica, right? Before they spent $500,000 of their hard-earned money buying a condo in Costa Rica, that they would have to get down on their hands and knees and look under the sink, right, to see if there was two pipes coming out with hot and cold water. If we believe that our clients would want to know that information before they bought the condo, then that we as real estate professionals can provide value to them in the form of due diligence materials, in ways to do better due diligence when they're looking at property. They do need you. They really do need you. That number 1 in 10 is old. I have to update this presentation. It's now about 3 in 10, 1 in 3, 1 in 4. I mean, it is an incredible increase in just the last 10 years. The most important things we can do is we can identify the people, we can serve them, and when we serve them, we get to earn. This is how you get a copy of my book. I'd love for you to have a copy of my book, but far more important, your clients who are looking at property overseas, the 1 out of 3 now, the 30% of U.S. citizens who are now considering a property overseas, right? They need this book. And if you can help them get the book, register them with us or with any developer or realtor overseas, you have the ability to serve them, help them make better decisions. And when you do that, then actually earn a fee or a commission as appropriate in your particular case for providing that service. Your clients really do need you. The crypto is happening. It's not going to happen. It is happening. Adaptation, the adoption of this as a monetary mechanism has already occurred. It's growing quickly. Our clients need us in several capacities, right? They need us for due diligence when they're looking for property overseas. They need us to be crypto savvy so that when they want to make a transaction domestically or overseas, wherever that happens to be, we're prepared to say, yes, I can help you do that. I understand it enough that we can connect you with a loan group. We can connect you with a title company that will give you the ability to make your transaction using crypto. When we can step up to the plate and do those things, we open up the ability to serve a much larger group of people, a lot of the millennials and Gen Zers who are coming along, again, with very small current home ownership rates. So over the next 1, 3, 5, 10 years, this is our growing marketplace. Yes, a lot of boomers are going to be listing houses, right? They're going to be downsizing, going somewhere else, or their kids are going to be, listing their houses when the boomers die, right? So that market segment's out there. But if we're looking for buyers, the buyer trend is on the millennial and Gen X and Gen Zers. And those folks are crypto savvy. What was it? 59%, I think, of boomer or of millennials, 51, 59% of millennials currently have crypto. So we need to be prepared. I hope we're getting prepared. I hope this presentation was helpful in those capacities. So I'll end there and offer up to Q&A.
Thanks, Mike. That was good. Out of respect for your time, because I know you have to run at the top of the hour here, I'm just going to go through. If you guys have questions in the Zoom, please put them in the chat. I'm going to go in order here in which they were received, so we can make sure that Mike gets out of here at the top of the hour. So Mike, first question I'm seeing here is, what percentage of your ECI inventory are you accepting with crypto?
Great question. We will take crypto on any of our products. We've taken, I'm going to put up a number outside of the loan, right? So the Marriott thing's its own entity, but I'm guessing that somewhere under 10%, 5 to 10% of our transactions have been crypto based over the last decade. We were absolutely the first developer to take a crypto transaction. We got invited to speak at the Bitcoin conference in Miami back in 2021, a few months ahead of the Bukele announcement, as a matter of fact. We were invited to speak and present at the Bitcoin conference because best anyone could tell, we were the first developer to accept crypto. It was Bitcoin specifically for a real estate transaction. We've been doing it for a long time. We're going to continue to do it. And look, I think, the volatility of crypto is real. It's up, it's down, it's up, it's down. I mean, it's all over the place. We take somewhere between 90 and 95% of the crypto that we get. It's usually Bitcoin. We have a Coinbase wallet. People can pay in Ethereum and a few other coins. We don't take any of the shit coins. I mean, it's got to be Bitcoin, Ethereum. It's got to flow into our Coinbase wallet. If we somewhere between 90 and 95% of the crypto that we accept in a transaction is immediately within seconds transferred over to what is called USDT, USDC. It's a dollar denominated coin. One coin is $1. It's fixed. So we take our Bitcoin out of the volatile up and down. We move 90, 95% of it into a dollar based or dollar denominated coin to lock in the value of that, because many of our suppliers don't take Bitcoin or crypto. And so we have to pay in a dollar economy. But we keep anywhere between 5 and 10% of the crypto we get in our treasury. And going all the way back 10 years ago, we were getting Bitcoin in the whatever $1,000, $2,000, $3,000 range, and today it's whatever $75,000, $80,000. So our crypto treasury has done very, very well for us over the years, and I expect it to continue to do well. But we'll take crypto for any of our products, but internally, as a measure of prudence, we convert 90, 95% of that over to a dollar based coin almost immediately.
Excellent. I'm kind of going through here to make sure we can get a wide variety. So I'm seeing also, you mentioned shitcoins. Is the reason that Bitcoin what's the reason for it being considered for real comparatively to others? And then is there a reason maybe for that popularity?
Yeah, it was first. I mean, it was the first, whatever, crypto kind of, blockchain based currency in the marketplace, Satoshi, whether that person's real or not, whatever. But anyway, it really created this incredible concept. And the idea was to take money out of the hands of governments and put it into the hands of everybody, right? Or nobody, right? Everybody or nobody. And that's kind of a cool concept. But Bitcoin, because it's a finite quantity, 21 million coins can only ever be produced. So it gives an element of finiteness. Many of the other coins out there don't have a limit. They can be any number, right? They can produce this, I mean, it's sort of like the tulip bulbs, right? I mean, if you can grow more tulip bulbs, how much value are there when you've created your millionth or billionth tulip bulb, right? At some point, they're worthless. Same thing is true with much of the cryptocurrency that's out there in the marketplace today. But the biggest single factor, I touched on this, and I just want to reiterate, is that Bitcoin and Ethereum are utility based. People use Bitcoin in transactions. People use the Ethereum platform to build other software and blockchain items like title structures or contract structures, right? So it has an actual utility in the marketplace. And at the end of the day, I think utility is the key. But by the way, I mean, yeah, utility is also faith-based, right? I mean, here's a $10 bill, right? I mean, here's a $10 bill. Like, what's the utility of this piece of paper? If I'm stuck in the wilderness and I need to start a fire, then the utility of this $10 bill might be worth far more than $10 if it meant my life, right? But there's a faith-based element to money, right? Like, I give this to somebody and they have to believe that whatever they're giving me, a bag of potato chips or a burger or something, right, is worth this piece of paper, because this piece of paper inherently is almost worthless, right? There's no worth to this paper, a fraction of a penny, right, except on faith. And I think that's the other element of something like Bitcoin. The community of people who have faith in the product and are willing to transact back and forth using a Bitcoin is very similar to the people, all of us, presumably, willing, except for Pam, you're in South Africa, I think I heard. But anyway, except for all of us, what's the value of this paper? Nothing. What's the value of the faith in the paper? $10, right? Same thing is true with Bitcoin, but there are some additional utility functions in the Bitcoin and Ethereum world that make them far superior to most of the other cryptocurrencies out there.
Gotcha. Okay, I think you touched on one of them with the finite. I see a finite question in the chat for Bitcoin versus other potential cryptocurrency out there. So the only other question, are you looking at tokenizing the real estate ownership using a security token offering?
Great question. We've considered that. We've toyed around with it. And the answer is probably someday. The challenge is that I'm going to use the word gimmicky. It's a little gimmicky right now, because the way you have to do it in most countries, and I can't say all countries, I think it's all countries, but there may be an exception I'm not aware of, is that in order to tokenize a product, given the current title systems in common law countries, US, England, Canada, Australia, New Zealand, civil law countries, all of Latin America, much of Europe, Spain, Portugal, Italy, right? Germany, like Austria. You've got a legal system, whether it's common law or civil law, that have certain rules and prescriptions. And the only way to tokenize a property is today, that I'm aware of, is to put it in a corporation. So you take the title of the property, a physical title in the legal regime, civil law or common law, you put it into a corporation, and then you take that corporation and you tokenize it. It's kind of gimmicky because I don't need tokens to do that, right? I can give everybody some shares of the company, or we can we can syndicate in real estate, a lot of syndications, right? And so there's already a mechanism to do the same thing. It's just called syndication, or it's called share ownership. And the tokenization itself, while it's sexy from a word perspective, a semantic perspective, it's not functionally any different from a syndication, really, because the title itself, the actual title itself, is a legal construct of either civil law or common law. And that when that piece changes, when the law changes, when common law changes, when civil law changes, to allow the title itself to be a token or tokenized, then the answer will be a clear yes, Getty. We will absolutely be all over that. We'll be at the forefront of it. We're paying attention to it. But today it's just kind of gimmicky, and I don't know, just not worth the time, hassle, or money to play with the semantics. So,
Yeah, one more on that, and then we'll get to Ahmed. Do you see a forecast for that
no.
potentially? Okay.
Government. I'm sorry. Yes, government time. Government time.
Excellent.
Yeah.
Go ahead.
Yeah.
Mike, thank you. That was great. By the way, rest of Mike's bio is on the registration page, and I didn't want to take too much of time, but it's on there. And I'd like to thank Marsha. She spent a lot of time to get Mike Cobb to do this for us, and thank you, Mike. Marsha had a family emergency to attend to.
Yeah.
So, Mike, my question to you is, since this is a global group of folks dealing in real estate, and so when we're talking about global and risk of using it in international transactions, so there's always, the volatility which you addressed. Obviously, there's going to be anything between 10 to 20% by the time of settlement. But also with governments, regulatory issues, some accept it, some accept part of it, and some don't. So have you had any experience in that field, and what would you advise anyone thinking of doing that?
Yeah, I think the good news is that governments have been kind of a little bit deer in the headlights, with the exception of maybe Bukele and now the U.S., with the Genius Act, right? I think governments have been largely deer in the headlights. We don't know what this is. We don't know how to regulate it. And so they really haven't. And what it's done is it's really allowed, individuals, right? Corporations, individuals, to either acquire and transact in the crypto space without a whole lot of regulatory oversight. It's coming. The CBDCs, they're definitely here. They're coming. The governments like them because it puts crypto back in their hands again, right? And a lot of conspiracy theorists out there like this is how they're going to take control again. And truly, if you look from just a simple control perspective, if I have my my $10 and it's in my possession, there's not a whole lot the government can do. I guess they could confiscate my money or whatever, right? But there's not a whole lot they can do to control how I spend it, where I spend it. Whereas with a CBDC, right, a government-backed coin that's electronic. China's already doing this. China is already doing this with their social credit scores. They're controlling access to things like airplanes, trains, jobs. Like if they don't like you for whatever reason on your social media, they can dial you back in many ways. Access to any of those types of things. So this isn't like wild-eyed conspiracy theory stuff. It's actually happening. It's happening in China, right? And I would hope it would never happen in the U.S. Or Europe or other places. But politicians are politicians, and things change, and who can tell what's going to happen in 20, 50, 100 years, right? So the CBDCs give the government incredible power to control the use of that currency, because now not only can they deny hey, airlines don't serve Mike Cobb because he's bad on social media or has a bad social credit score, whatever they call it in China. With the CBDCs, they would actually have real power to turn off your money, just literally turn it off. So there's some things about that I think are scary. But again, at least for the time being, crypto remains a very, very effective mechanisms to make transactions, in private, right? And I got to go in a second. I think they're waiting for me on my other call. But the last thing I'll say is people have also said, "Oh, crypto's where the drug dealers do all their stuff." The biggest money laundering center in the entire world is New York City. New York City is the biggest money laundering center in the entire world by far. London's probably a close second, right? And so if we're thinking about money laundering and anti-terrorism, all that kind of stuff, I mean, the crypto world gets a lot of tar thrown at it because it's private. It is private. But it's a blip on the radar screen compared to what's happening in the major financial centers around the world in terms of money laundering and terrorism and things like that. So it gets a black eye, I would say undeservedly, really, if you just look at the volumes of those types of behaviors and activities in New York, London, and other big financial areas. So Ahmed, thank you so much. Marcia, I'm sorry you're not here, but thank you for having me. Thanks, everybody, and enjoy the rest of a great day today.
Yeah, Clayton. That's Clayton. He's up at midnight, man.
Clayton, good night. Get some rest.
Good night. Good night. It's midnight. Good night.
Thank you. Thank you, Getty.
We will be staying on for an additional 29 or 30 so minutes.